Open quote, what if I told you that the average American homeowner pays $150,000 to $300,000 more than the actual price of their house, and most of them don't even realize it? Not because the home was expensive, but because of one silent enemy: their home loan. Open quote, if you're planning to buy a home in the United States or you already have a mortgage, this video could save you tens of thousands of dollars. Close quote. Emotional connection, UA context. In America, owning a home is called the American dream. A white fence, a quiet neighborhood, a place your kids grow up in. But behind that dream is a 30-year financial commitment that can either build your wealth or keep you trapped, paycheck to paycheck. Most Americans focus on monthly payments. Smart Americans focus on total cost. And today, I'll show you exactly how to save massive money on your home loan, step by step, before you sign and after you move in. Tip 1. Understand this first. Interest is the real house price. Let's say you buy a $350,000 home in Texas, Florida, or California, with a 30-year mortgage at 7%. Monthly payment looks manageable, but total paid over 30 years? Over $800,000. That means the bank earns more than the house costs. You pay more than double. The biggest mistake Americans make, open quote, I can afford the payment. Close quote. Wrong question. The right question, open quote, how much will this loan cost me in total? Close quote. Tip 2. Fix your credit score before applying. This saves big money. In the USA, your credit score is everything. A 760 score versus a 660 score can mean 1% to 1.5% lower interest. That equals $70,000, $120,000 saved over 30 years. How to improve credit fast. USA practical steps. Pay credit cards below 30% utilization. Never miss minimum payments. Remove collections. Negotiate pay for delete. Don't open new credit before mortgage. Pro tip. Even waiting 3 to 6 months to fix credit can save you more than years of hard work. Tip 3. Shop for lenders. Don't marry the first bank. Most Americans go to their local bank, accept the first offer, lose money silently. Truth. Mortgage rates vary bank to bank. Credit unions often offer lower rates. Online lenders compete harder. What smart borrowers do: get at least 3 to 5 loan estimates. Compare APR, not just interest. Negotiate closing costs. Remember, open quote, banks negotiate every day. If you don't ask, you overpay. Close quote. Tip 4. Choose the right loan type. Not everyone needs 30 years. Common USA loan options: 30-year fixed, lowest monthly, highest total cost. 15-year fixed, higher payment, huge. In the United States, when most people buy a home, they don't really choose a loan. They are simply told, open quote, this is the standard 30-year mortgage. Close quote. And without asking questions, without comparing options, they sign the papers. This single decision silently decides how long you will stay in debt and how much extra money the bank will take from you. Because here's the truth: not everyone needs a 30-year loan, but almost everyone is pushed into one. Why the 30-year loan is so popular in America. The 30-year fixed mortgage is popular for one reason only: lower monthly payments. And lower payments feel safe, especially when rent is high, groceries are expensive, gas, insurance, and bills keep rising. So people think, open quote, as long as I can afford the payment, I'm fine, close quote. But banks don't make money from monthly comfort. Banks make money from time. The longer you stay in the loan, the more interest you pay. The hidden cost most Americans never calculate. Let's slow down and look at the big picture. A homeowner might say, open quote, my mortgage is $2,200 a month. I can manage that, close quote. But what they don't calculate is total interest paid over 30 years, total money lost to the bank, how long their income is locked. By the time the loan ends, many Americans pay double the home's price. Same house, same neighborhood. Different loan equals very different life. Banks love long loans. Here's why. Banks prefer 30-year loans because they earn interest longer, they reduce your flexibility, they lock you in for decades. The system is designed to make you focus on, open quote, can I afford this month? Close quote. Instead of asking, open quote, how long will this loan control my future? Close quote. This is not an accident. This is design. What smart borrowers think differently. Smart borrowers don't ask, open quote, what's the cheapest monthly payment, close quote. They ask, open quote, what loan helps me own my home faster with less interest, close quote. They understand, a loan is not just a payment, it's a timeline, and time equals money. Every extra year in debt is less investing, less freedom, more stress. Part 1 end. Transition to Part 2. So before we even compare 30-year versus 15-year loans, before we talk about ARM, FHA, or VA loans, you must first change how you think about loan length. Because once you understand this mindset shift, the next choice becomes very clear. In Part 2, we'll break down the 30-year mortgage in detail, what it really costs you, and why it may not be the best option for everyone. You already bought the house. You already signed the mortgage papers. Most Americans think the story ends here. They believe, open quote, now I just pay the bank every month for 30 years, close quote. But here's the truth. This is where the real money game actually starts. After you get a home loan, you are standing at a crossroads. One path keeps you in debt for decades. The other path helps you build real wealth. Banks hope you never learn the second path. Today, you will. Tip 7. Make extra payments, but do it the smart way. Banks never advertise this. If you make just one extra mortgage payment per year, you can cut 7 to 10 years off your loan, save $60,000 to $120,000 plus in interest. And no, you don't need to be rich. Smart American strategy. Instead of paying one big amount, add $100, $300 extra to your payment, or split payments bi-weekly, or use tax refunds and bonuses. Important rule, always tell your lender, open quote, apply extra money to principal only, close quote. If you don't say this, the bank keeps the advantage. Tip 8. Refinance. Only if the numbers make sense. Refinancing can be powerful, or it can quietly destroy your savings. Refinance only if interest rate drops at least 0.75% to 1%. You plan to stay in the home long term. Closing costs are reasonable. You don't restart bad habits. Do not refinance if fees cancel the savings. You keep extending the loan back to 30 years. You refinance just to feel comfortable. Ask one smart question. Open quote, how long until I break even? Close quote. If the answer is too long, walk away. Tip 9. Pay a 30-year loan like a 15-year without pressure. Here's a powerful trick smart Americans use. You don't need to officially change your loan. Instead, keep your 30-year mortgage. Pay it like a 15-year when possible. Why this works? Flexibility during emergencies, faster payoff when income increases, no penalties. Use salary raises, side income, bonuses, extra cash, freedom without risk. Tip 10. Remove PMI. Banks won't remind you. PMI, private mortgage insurance, is one of the biggest money leaks. It can cost $100 to $300 per month, thousands over time. Most Americans keep paying PMI even when they don't have to. How to remove PMI. Reach 20% equity, request PMI removal, or get a new appraisal if home value increased. Banks will not call you, you must ask. This one phone call can save you thousands. Tip 11. Don't upgrade your lifestyle, upgrade your loan. This is where most people fail. They get raises, promotions, better income, and then they buy new cars, bigger TVs, more subscriptions. Smart homeowners do the opposite. They use extra money to reduce mortgage balance, kill interest faster, buy back their time. True wealth is not what you show, it's what you don't owe. Common mistakes that keep Americans broke. Paying minimum for decades, treating mortgage like rent, ignoring refinancing windows, forgetting PMI removal. No exit plan. A mortgage should be, open quote, a tool, not a life sentence, close quote. Imagine waking up one day. No mortgage payment. No pressure, no fear of missing a paycheck. Your house is truly yours. That feeling? That's real freedom. Not the size of your home, but the control over your money. Final CTA, strong call to action. If this video helped you understand how to beat the bank, hit like. It helps other Americans learn this too. Subscribe for more real money saving strategies. Share this with someone paying a mortgage. You might save them tens of thousands of dollars. And comment below, home loan freedom, if you're ready to take control of your financial future.